Now today is a day that will consist of running some errands. First step for today is to drop the little man off at daycare. My luck. I go in to get my clothes and they gave a pair of my pants away to someone else. Damn it. Oh well, it happens. So the 4 things we're going to talk about today, and I made notes just to make sure I would not forget. First, what is a mortgage? Very important thing since we're talking about mortgages. What is an interest rate? Also not to be confused with what is APR, which are 2 completely different things. What are mortgage terms, loan terms, or years? Those are kind of, that'll dictate payments, things on those lines. So we'll go over that. And then, is a mortgage right for you? As I mentioned in my previous video, a mortgage is not for everyone. So we're gonna go over some different options, get that focus, and see if a mortgage actually is for you. All right, so let's answer question numero uno. What is a mortgage loan? Might be a little windy, so bear with me, please. Easiest way to put it, a mortgage loan is an agreement that you've made between a bank or a creditor to pay on a property in X amount of time over X amount of years, and at a specific rate of interest. And once the property is actually paid off, then now you have the title to the home. Until then, the actual creditor is actually the one holding the title to the property. One very, very important thing you should also know about a mortgage loan is just because the terms are set as to where they are that you set up with the lender, you also have the opportunity to pay back much faster. Just because it says you got a 30-year loan doesn't mean you necessarily have to pay it back in 30 years. You can pay it back in a shorter amount of time. Got to see if I can find myself a tripod. I think I found what I needed. So it is. Doing well.
Oh, I haven't fallen over yet, but soon enough, you know, soon enough.
Just got done at Fry's Electronics, as you can see in the background. Now it is time to get back in the car again, and then hit the road, and we're headed to actual downtown Phoenix right now. Meet up with some people, and then get some work done. And then, of course, we're gonna answer some more questions. All right, unfortunately it started raining outside, so this was gonna be a little bit more entertaining, but we'll have to do. So the next thing we're gonna talk about is mortgage interest. What is that? The easiest kind of way to put it is, as we segue back to what is a mortgage, there's a rate of interest that the bank or creditor needs to make to be able to compensate for letting you borrow the money. That's basics of what interest is. Now it's kind of a little bit of a formula to figure everything out, and I'll post something of it, let's say right there. What you're looking at is monthly payment, which is M, P, which is your principal, mortgage principal, which is your loan. Then you also have your monthly interest, and then you have your number of months. So that segue us into our number 3, which is term of a loan, amount of years. Usually it's calculated in months. Most loans are going to be either 15 years, 180 months. You're also looking at your typical 30-year, which is 360 months, or your 20-year, which is 240 months. Now, there is a 25-year loan that's 300 months. Most people usually will go probably the polar opposites, which will be either your 30-year or to your 15-year. So that's kind of the basics of that. We can definitely dive in a lot deeper into like how to figure out what your monthly payment is, etc. That's what that equation is that I put right here. That'll help you do that. Or you could just simply go to bankrate.com. Easiest way to do it. All right, this brings me into my final talking point is a mortgage right for me? Most people, when you think of a mortgage, you think of a extremely large amount of debt that you're paying over extremely long periods of time that you likely probably won't ever pay off. Which, to a little bit, that's kind of true. But I think a mortgage is right for a lot of people because it allows you, especially where rates of interest are right now, it allows you to leverage your cash that you have in your pocket to be able to use that for other things, such as any emergencies, invest additional funds that can potentially make you even more money than what you're paying in interest, and be able to leverage that cash, because as we all know, cash can be definitely a big thing that you want to have always on you. That allows you to be able to do whatever you want. Also, too, you can ask yourself, do I even want to buy a house? Does it make sense? Am I moving? Am I not moving? How long do I plan on being in a home? If I do plan to move and I own this home, do I want to be a landlord? Because that's tough too. So those are kind of a lot of things to think about when you're talking about, is a mortgage right for me? But me, obviously being a loan officer, get a mortgage. It makes sense. Keep your money in your pocket. Don't blow it all. It makes so much sense. And if you are totally okay with making that commitment to getting a home, do it. It's a great investment. Likely, especially in Phoenix, you're going to pay less in rent for most places than you would in a mortgage. Even if you put the bare minimum down, you're going to pay less. You're going to pay less in a mortgage than you would pay in rent, even with the bare minimum amount down, because rent has just skyrocketed because it follows the trend of where mortgage is going. So price of mortgages go up, price of rent goes up. They just follow each other. So think about it. That will be what I'm going to end on. And thanks again for watching, and look forward to the next episode. This is episode number 1.